Welcome to TheoTrade. This is Don Kaufman. It is July 11th, 2017. Well, in today's marketplace, if you blinked, you may have actually missed it. And missed what? Well, the futures ended up on today's session massively unchanged. I mean, come on, they're down 50 cents, right? And I live for saying massively unchanged. We closed at 24.24. Which is exactly, for the most part, where we started this week. Come to that momentarily. The S&P futures, though, had a brief bout of some fear. Now, we here at TheoTrade have been talking about very specific levels of risk that have persisted inside of the markets kind of week in and week out. And we've been talking about these levels for weeks and weeks. The upper level, okay, ultimately at, and we're bringing it into scope over here, up on top, that's 24.38. Down below, which was tagged today, was 24.11. And again, how ironic that we literally came down, touched 24.11 on the dime, and actually rallied off of it over here on some brief news. I know everybody got a little scared over there, but it's a decent sized decline. Again, about a 15-point decline from the trading session. And then ultimately, where did we end up? Rallying right back into kind of the happy zone over here of this 24.24. Speaking of massively unchanged, that's where the futures are here in the aftermarket session. The Nasdaq once again strong. So the Nasdaq has rallied back. And again, I want to show something a little bit different over here, which is a 30-day, 1 hour. The volatility. Is it dying down on the Nasdaq? Not necessarily so. So the Nasdaq is still throwing off 50-point plus swings on a day-to-day basis. Today really is no different. And again, you know, if you're looking at today's trade and you're thinking, the Nasdaq can only move 20 points today. Yeah, but from high to low, it actually, the swings were right there. Again, the low being this 56.67. And again, I'll bring it up on an intraday chart. I guess that's what you want to call a V bottom, because that's pretty wild over there, touching down and taking back off to the upside. But what's really more in focus right now, specific into the Nasdaq, it's not so much a recovery inside of Microsoft, right? So we're looking at, you know, the tech giants that be. It's the recovery inside of Facebook. So Facebook, you know, I mentioned this a few days ago, looking at getting short Facebook. And we did, and we actually rode Facebook down for a nice about, 2% gain. Facebook has exploded back to the upside. It's a good thing. We watched Facebook come off, covered the shorts, and moved on. Facebook not only has exploded back up, but it's just about to breach, all-time highs. In fact, we're just off one of the all-time high close. And we have earnings coming out in the near future. Tomorrow, we'll see if there's a little bit more action to the upside. I am looking for another short entry at this point, not taking it. Okay? I'm not actually taking the short entry on Facebook at this point in time. I've watched it rally up ultimately 3 days in a row over here. It looks a little bit, prohibitive at this point, given the fact that it's very likely to breach the all-time high with the earnings right in front of us. Also a little bit scary out there. In addition to it, looking at some of the tech giants over here, Apple really has not pursued much of the upside in the last couple of days. So I caution you inside of the Nasdaq, over the next 2 trading sessions. And what am I really cautioning? We got to get a feel for, is the Nasdaq, it's still having these 50-point moves. Clearly they've been to the upside in the last, few trading sessions. Nevertheless, is the Nasdaq going to have more progression to the upside? And the reason I question that is simply because Apple could have considerable room to move to the upside, given the fact that it has really underperformed Facebook. It's, drastically underperformed even Google to the upside. Amazon's a bit of a different story. Amazon's in a very similar boat over to Facebook. And these are the underlyings that are really driving the Nasdaq on a day-to-day basis. Now, that's the Nasdaq. And if you're not interested in the Nasdaq, and if you're not interested in the Facebooks, the Apples, the Googles, the Amazons, the Microsofts, fine. What's actually driving the S&Ps? And this is critically important. So again, we've discussed extensively these levels. And these levels, again, this 24.38, we touched down to the 24.11 today. what actually held the S&Ps back? None other than the financials. So taking a look at the financials, they're under the slightest bit of pressure really just in today's trading session. So we haven't seen them progress forward. And the financials not progressing higher is actually holding the S&Ps back. So no matter what you might think about market capitalization, in the end, the financials, okay, they have huge market cap. And I know people get very focused on different sectors. In the S&P, the largest sector out there is technology. I recognize that. But there's a number of stocks that are in the technology sector that happen to, in fact, move with the financials. And what that ultimately means is the financials, they carry just as much weight as does technology. So the financials close down, okay, 0.7%. Now, if you want to get a feel for what the S&Ps are likely to do, okay, that, people, we're going to have to be a little bit patient. Why? Because the financials are about to pass through earnings. And those earnings really start to kick into kind of full swing this Friday morning. We want to hear the likes of, JP Morgan, Citi, Bank of America. Bank of America is actually going to come early next week. Wells Fargo. I'm not as interested in a Wells Fargo as I am, Bank of America, JP Morgan. I want to hear what the firms that trade have to say. And the firms that trade heavily are your Bank of Americas, your JP Morgans out there, your Citis. And again, Bank of America don't have to wait till next week for, but a lot of the earnings of the banks are coming. And the volatilities, they're not all that high. But as I've pointed out, and I've been pointing this out on TheoTrade in our chat room on a day-to-day basis, the bonds have had a massive move to the upside in the previous quarter. Now, I know a lot of people are focused right here, but that did not occur in the previous quarter. What occurred in the previous quarter is this drastic move from, 145 and change all the way up into almost $10 higher inside of the bond market. And it would be not only relative, but it's very likely some of these banks are on the wrong side of this move. Okay. I mean, the banks, again, they have huge bets inside of the treasury markets because of Dodd-Frank, because of the Volcker rule. Most of the banks don't take extraordinary risk and cannot take extraordinary risk inside of individual equity and index markets. They can take extraordinary risk, though, inside of the bond market, and they often do so. Therefore, this very large move inside of the bond market, the treasury market, is, again, likely that we're going to see some banks on the wrong side of it, and we could see some pain in the XLF. Now, the XLF, the implied volatility is by no means extreme in here. Now, we're sitting on like a 17 volatility. None of the banks with some heavy volatility. But people, this is what's going to drive trade the rest of the week. Watch the financials. They're going to give us the next leg, the next move inside of the S&P 500, regardless of what technology is doing. Thanks, everybody, for joining us at TheoTrade. Have a wonderful evening. Bye-bye.